Ladies and gentlemen, good day and welcome to Trustline Advisors LLP investor call for AIF fund. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Arunagiri, Founder, CEO and Chief Investment Officer. Thank you, and over to you, Mr. Arunagiri.
Thank you. Very good afternoon to everyone. Thanks for joining this call on a weekend. I really appreciate that. As all of you know, we send our quarterly newsletter at the end of every quarter, highlighting portfolio performance as well as portfolio actions. Most of you must have had an opportunity to look at that. This call is to take it further from there and provide an opportunity for all our investors to understand our portfolio performance a little more in detail, and also in terms of how portfolio is structured for future performance and the current market outlook. So that's the broad objective. In terms of structure, it is very usual. We will spend the initial 10 to 15 minutes in opening commentary, in which we will cover the discussion on the market as well as on the portfolio action and highlights, and post which we'll throw the floor open for Q&A. Overall, we would like to wrap up the session in 30 to 45 minutes. That's a broad plan. Before I get into discussions on the market, let me also take a few minutes and share a status update on the fund. The fund is at a very, very crucial juncture. Why we are saying this is because we have a limited time before the fund comes to a closure. The timeline for closure of the fund is 15th Jan 2025. So we have barely about 8 to 9 months before the fund comes to a closure. From that perspective, it's very crucial for the next few quarters are very crucial for the overall eventual performance of the fund in terms of how the portfolio is going to perform in the next few quarters. While the fund is running at about 2.5 to 2.6 times the inception value, what we are more excited is in bulk of the positions, the earning upcycle and consequently the re-rating of the positions are yet to play out in bulk of the positions. So in our view, I think 30 to 35% of the positions are largely re-rated, whereas in the rest of the positions, it has been so far partially re-rated, and in terms of earning tailwinds, in terms of earnings visibility, we see further re-rating in these positions in the coming quarters, which should lead to much bigger returns for the overall fund. So that way it is a crucial period for us. So we do hope that we turn very lucky in terms of seeing the full re-rating in these positions before the fund comes to a closure. So now let me, with this quick intro out of the way, let me move on to the discussion on the market. These are very unusual times for the markets. It had to deal with a lot of headwinds. If you go back and look at in the month of March, we had these SEBI strictures in terms of new regulations and with coming out on stress test for small and mid caps. And then in April, we had this geopolitical scare in terms of tensions in Middle East. And that overhang is still there for the markets. In spite of all this, what has surprised most of the market participants is the kind of strength and momentum and resilience what we are witnessing in Indian market, especially in the broader space. Normally, when the markets are trading at an expensive valuation, that to about 33 times and 30 plus or 33 times in small cap index level, the market is very susceptible and vulnerable to negative news flow. But this time it's not playing to the script. We have no dearth of negative news flow. As I said, geopolitical risk is still an overhang, and SEBI, in terms of coming out with new restrictions as the market keeps moving up. There's a distinct possibility of that. And even from US, there are, the signals are not very, signals are very mixed. The recent data points, if you look at, there are now fears of stagflation in US. Inflation is very sticky and the growth is slowly slowing down. And the market, which was pricing in almost 3 rate cuts in this year, now it is more doubtful whether even 2 rate cuts would happen. So the scenario of higher for longer, higher rates for longer kind of scenario might still be a possibility. So with all these risks, one is really surprised at the resilience of the market. But what is most striking is generally after, such a continuous bull run, continuous one-way bull run for almost a year, one would have expected some kind of signs of exhaustion for the small and mid caps. Unfortunately, there are no signs. It looks like market wants to climb wall of worries, and it wants to set new record after. So just to give a data point, from March low, when small cap index hit a kind of a low in March, post the SEBI strictures, the small cap index is up by about 15% as of yesterday. That's the kind of momentum one is seeing in this market. Now, whether this will sustain, the immediate question on the investor's mind is whether it's sustainable, whether this is going to pop out at some point of time, and geopolitical risk is still overhang. There are mixed signals from Fed and SEBI in terms of new, regulations or restrictions coming on small cap is going to be a distinct possibility. So in this kind of situations, how will this market play out? Will there be a correction, or will it be a kind of time correction, or will it be a sharp price correction? So these are some of the questions on investors' mind. And also, I think investors are wondering why, what is driving this kind of sustained optimism in Indian markets. Of course, in terms of what is driving Indian markets, we all know that it has been discussed and debated in many forums in our own communications through our business notes and newsletters and investor call. We have been highlighting many of those trends of Indian, macro outlook. But even in spite of sounding, it might sound a little more repetitive, but still I would go ahead and list out some of the drivers which are giving this level of momentum and resilience to Indian markets. One is, of course, India's robust macro outlook and markets' confidence in terms of political stability and policy continuity, and potential big turn in private investment cycle. Of course, it has been delayed and it has been, people have been waiting for this turn for quite long, but there is a potential possibility that there could be a big turn in private investment cycle. And then there are, strengthening flows from MSCI ex-China kind of funds. I'll share some of the data points specific to some of these points, the top 3. One is, India's macro outlook is, if you have to look at some kind of supporting evidence, I think all that you need to look at is how the Indian rupee is performing. In this calendar year, if you look at all the emerging market currencies, most of them are down 5 to 6 to 7%. Because of this mixed signals coming from Fed, because of this, inflation being sticky in US and less possibility of rate cuts this year. So all this is putting pressure on most of the emerging market currencies, but Indian rupee, if you look at, it's been fairly resilient. This is a reflection of confidence, investors' confidence on India's macro robust outlook. Then to share the data points in terms of MSCI ex-China flows. Now, I was just reading one data point in terms of how Blackstone's MSCI ex-China fund has done. Just from nothing about 2 years back, it has got about close to $11 billion. And since it's ex-China, India's weightage in that is about 24 to 25%. And there is going to be increased momentum in these kind of funds which are ex-China. So that's going to give you in terms of outlook for FI flows for Indian markets in the coming months. Of course, FIs are selling in this month. I'll come to that point a bit later. But these are the drivers. And in terms of private investment demand, Again, if you look at this particular cycle, it is more and more looking like 03-07 cycle where the investment drove the entire expansion for the economy. If you go back and look at 03-07, the investment as a share of GDP went up from the low of 27% to close to about 39% from 2004 to 2007 and then stayed there till 2011-12 before it started crashing all the way in the next decade. Now one is witnessing the share of investment to GDP going, hovering around 34% at this point of time. And the consensus estimate is that it will move up from 34 to 36 in the coming months, leading to big turn in investment demand. As all of us know, investment demand has a multiplier effect. So over a period as a lag effect, you will see consumption also adding to the fire. So the outlook for the overall expansion is looking solid because of the potential private investment turn. Now in all these how we are looking at this market. It has done so well for so much longer time. It has claimed a lot of wall of worries. It is still showing a lot of resilience. Will it sustain? Will it continue to run like this? Or are there risks? Or will the market turn stock specific and it will go through a kind of a range bound time correction kind of scenario? It's very difficult to say, but I will share one data point again here. As all of us know that FIs have been on a selling spree in this month of April. Every day, their sell numbers are close to about 3,500 numbers in spite of market's upward momentum. One doesn't know why FIs are selling in spite of this optimism on the overall macro. One reason most of the market participants are speculating is that probably FIs, unlike domestic investors who are more confident about the political continuity, FIs, as a process, they don't want to take this event risk. As a result, they are unwinding their position to the extent possible. Now, so this also in a way is going to be pointing to their coming back post the election results. In case the scenario plays out as most of the polls are suggesting. So if there's going to be a political continuity, I think these FIs are selling now will come back. This is one of the speculation, which means the market momentum, which some of us are, speculating that even post-election the news flow will get discounted and market might go through a sluggish kind of phase. But there is a view that because FIs are selling now and they are likely to come back post-election, this momentum could sustain and surprise. That is, having said that, overall in the medium term, post the election, after a few months and quarters, our view is that given the sustained rally and the expensive valuation at which the broader space is trading, it's very likely that the market will turn stock specific and range bound. At what point it turns, we don't know. But at some point, I think given the kind of momentum what we saw, what we've been seeing, will turn into a stock specific market. And it's very unlikely this one-way momentum will continue for a longer period. That's the overall view, but in Indian markets, as we have seen in the last 1 year, anything could happen. It will not be a surprise if this momentum continues for a much longer time. That's what we think, and that's the overall summary on the market. With this, let me conclude the overall opening commentary. Thanks a lot for all investors for joining. As I said in the opening commentary, joining on a weekend. Really appreciate that. Thanks for your participation and patiently hearing what we have to say. And we look forward to further re-rating in our bulk of our positions in the coming months and quarters. We hope we'll turn lucky. And we also look forward to launching doing our soft launch for the next one. We would need the support of all our investors, and we look forward to that. And we do this as we had highlighted earlier. We do this call every 6 months, and we look forward to the next call 6 months down the line. Thanks once again. Thanks a lot.
Thank you. On behalf of Trustline Advisors LLP, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
For more videos, subscribe. Subscribe to our YouTube channel for our regular updates and follow us on other social medias.